Hello everybody, I'm Adit. I'm a senior assistant editor with VCCircle, and I have with me today Ranjit Punja, the founder and CEO of CreditMantri's. How are you, sir?
Very well, thanks, Adit.
Great. Just to start off with, I'm very intrigued by the name CreditMantri's. What is the name all about, and how does this reflect in the kind of work that you do for customers?
Let me address the first question about the name. We wanted a name that appealed to customers.
Sure.
Mantri has a lot of connotations. For us, it was more assistant, helper, minister, all the positive connotations of Mantri.
Sure.
And as the name suggests, the intention is to help people stay credit healthy.
Right.
And what we essentially are is a digital credit marketplace.
Right.
We put customers and lenders together, customers of any profile.
Sure.
So our primary task is to profile customers, match them off with willing lenders,
Right.
and if the customer requires help to either maintain, improve, resurrect themselves from maybe prior credit problems that they may have had, we assist them with that as well. So it's an end-to-end to become credit healthy,
Sure.
with the intention of availing credit at some point in time. And we do all of that digitally.
Okay.
Yeah.
So essentially, you are a tech company which provides.
It's a popular thing to be called fintech. Yes, it's got a lot of technology and it's got a fair amount of finance and credit.
Sure.
And as promoters, we come from a banking, lending background. So yes, it is fintech in the way fintech is defined. Yes.
Absolutely. So it's about been a year since you started, a little more than a year.
The company is about 2 years old.
Okay.
We've pivoted our model about 6 months ago, and we got so two promoters, two of us ex-Citi bankers got together a little over 2 years ago, and a third Citi banker joined us in November last year. So we're 3 co-founders now.
Okay. So the pivot happened to the marketplace model.
Pivot happened to the marketplace model because earlier all we dealt with was the credit challenged individual,
Sure.
who was unable to get credit and didn't know why he was not getting it.
Sure.
So it was a little bit of education, a little bit of getting their credit score, evaluating their credit report, telling them what the issues were, helping them to improve their score,
Right.
and then we would honestly tell them you can go anywhere and get a loan. And having done all of the hard work, we, one day knocked ourselves on the head and said, hey, why don't we get them a loan as well?
Right.
And then having built the ecosystem, or rather plugged into the ecosystem with the bureau, with the lenders, we said, why are we restricting ourselves just to the credit challenged individual, where most of the opportunity seems to be in people who have no credit score and a very thin credit file. So that's where we kind of pivoted to include them as well.
Sure.
But more importantly, to try and profile that customer so that we could make valuable information available to the lender,
Right.
who would, and obviously to the lender, it is a fully profiled customer, approval rates tend to be higher, and the information is a lot richer than an application form can capture. So we are giving nuanced information to the lender that will hopefully increase the lendable pool.
Sure. Was monetization a challenge in the previous model?
Not really. It wasn't. The customer paid for services. I wouldn't say it was a challenge, but people didn't understand what we did.
Right.
And obviously far fewer were willing to pay for something they didn't understand. It was a digital model even then. Came to us through word of mouth. We said if we are able to profile it and give something free to the customer, then the customer is more willing to deal with you, especially if you've added value in that free period.
Right.
So today we offer the customer a free credit score and a free credit analysis. So that's the big draw into the website.
Sure.
And having done that, the customer is really broken into 3 segments. Right? Folks who honestly don't need any help because they have a good enough score. Other end of the spectrum is, I have a problem and I'm unable to get loans from mainstream lenders.
Right.
And the third, and where I believe is the most of the opportunity, is where I don't have a credit score and honestly don't know how to improve my score and to get loans from mainstream lenders.
And this could be individuals as well as SMBs, right?
Yes, I know at some stage, the both kind of merge.
Right.
The focus is on individuals.
Okay.
If they happen to be SMEs, then
Sure.
we deal with them as well. There's little or no corporate today.
Any particular instance or anecdotes which actually led you to think that a company like this is needed 2 years back?
So my personal background, towards the latter half of my long career with Citibank, I managed collections for Citi. So understood debt collections pretty well. And as a result of which, the starting point was we believed that the existing collections models were fatigued.
Okay.
By fatigued, I mean you do not door knocking, do telecalling, and that model hasn't changed for many years.
Right.
While in the US, one of the things we started off was to try and deal with the customer digitally, and a nameless, faceless entity help the customer repay, and
Right.
where the customer was really not pressured by an individual either coming to their home. So that was the genesis of the model,
Right.
saying we can do this better. Never wanted to really do collections, but to give credit challenged individuals the ability to re-establish themselves. So that
Sure.
was the genesis of the model. And because we understood the space, didn't think it would be digital as the way it is today. And somewhere along the way, we figured that in order to be able to scale and scale quickly, digital is the only way to go.
True that. So ever since you pivoted to the marketplace model, what in your view are the top 2 or 3 challenges that you faced?
Part of it is regulatory, I would think.
Okay.
And the reason I say regulatory is the credit report, which is a significant piece of our ability to analyze individuals who have had credit before, that needs to be made available to us seamlessly.
Okay.
Right? So what happens is if somebody comes into our website and is able to see their score, able to see the analysis, and then able to see what they need to do to correct their score, and at the same time in that same single session also look at lenders who are willing to lend to them, that makes the experience for the customer seamless. So when I say regulatory, the issue with it for us just now is the inability to seamlessly get or obtain that credit report
Okay.
for the customer.
From the
There is
credit bureaus.
From the credit bureau. The report on behalf of the customer.
Right.
So it's a kosher way of doing it, but it still has documentary challenges
Sure.
that there are models in other countries that are able to do it seamlessly, and large numbers of customers go through that. So that's our initial pain point.
Okay.
The other is convincing lender that even a credit challenge, an individual with a very thin credit file, to be able to make products available to them, more specifically unsecured products available to them.
Sure.
So that's a little bit of a learning process. Everybody needs to test it, make sure that the information that we provide to them is useful,
Right.
and the credit should perform well.
Absolutely.
So that requires a little bit of time. So we're hopeful that the richer information will help them make better credit decisions, and
Sure.
and this will result. And since the customer is coming in with the mindset of and full knowledge of the credit score, we believe that portfolio is likely to perform much better, right? As opposed to the one that has no idea what a credit score is, and only feels the pinch of a credit score when one is not, or when a loan is not made available to them.
Right.
So,
I think Aadhaar linked credit scores could be, could help the bottleneck.
Absolutely. I mean, the Aadhaar, what it gives you is obviously a national ID. It KYCs the customer,
Sure.
right, and establishes an address. But what it doesn't do, and I know Aadhaar has changed that very recently, is doesn't really. It simplifies the decision process, obviously, but that's really only one piece of the puzzle, right? The key things are the intent to repay and the ability to repay.
Right.
Aadhaar, all it does is saying you can contact the customer and the customer really exists,
Sure.
right? But the other two pieces, which is intent and ability, still need to be established, and that's what we're hoping to do through the profiling exercise.
Tell us a little bit about your recent round of funding, 2.5 million is what the company raised from IDG and consortium of other investors. What was the need to raise capital at this point? And if you could just talk us back through the journey of raising your first million, so as to speak.
We'd been bootstrapped until then. So honestly, every month the revenue is needed to pay for the next month's bills.
Right.
What the funding has given us is the ability to experiment, but most importantly, the ability to scale and to test, obviously build the team, build the technology, and establish that this is a scalable model. The fundraising journey itself, I think, I wouldn't say it was easy. Our model, at least at that point in time, needed investors to buy into.
Okay.
We had dealt, like I said, with the credit challenged individual. For us to be able to establish customer proof points, because we were providing, I wouldn't say advice, but suggestions to customers on what they needed to do for the score to improve.
Right.
We needed to make sure that what we suggested actually came true if the customer walked the suggestions with us.
Right.
So that in itself can take anywhere from 6 to 12 months.
I see.
So having done that, now is the chance to scale.
Right.
And like I mentioned to you earlier, our ability to get large numbers of customers into our website is driven by the fact that we offer a free credit score.
Sure.
So that costs money.
True.
Right? The technology costs money, building the team costs money. That's why the funding was required.
Right.
I think what simplified this is our own the three co-promoter backgrounds and our proven track record to be able to make this happen.
Sure.
To execute against the model. That's in my mind what simplified getting the funding.
Okay.
Right? Three of us haven't been entrepreneurs before. We've worked for large organizations, which automatically open a lot of doors. But now on the other side, it's a whole different ballgame. And while it does open a few doors, we are a startup with a no name.
True.
But we're getting there, and we are extremely optimistic.
Right. So, in the business model itself, do you have adjacencies to enable better monetization, or are there other points wherein you think, hey, this can be monetized going forward, new revenue streams?
Absolutely, there will be new revenue streams. The intention, while it's a customer also pay model today, in short order we intend to make that a lender pay model only. While it is a B2C business today, there are a whole host of B2B opportunities as well that we're working on. So absolutely, there are many areas that we can monetize depending on the success of some of the things that we are testing. That should come into being over the next 60-90 days.
So you also intend to be a B2B platform going forward for credit?
We will have a couple of B2B products that lenders could use.
Okay.
And we could plug into their own credit initiation engines.
Okay. But it's not going to be B2B lending per se?
No.
Okay.
No. We are no immediate plans to be in the lending space.
Okay.
We will be in the data collection, analysis, provision of data both to the borrower as well as to the lender.
What about a P2P model? Is that something you would look at some
I'm
point?
sure we will. Just now, no.
Okay.
We want to remain focused with what we're doing just now. I know the P2P space is getting exciting in India, and as long as there's good regulation, I'm sure they'll do well as well. Right now, we're very focused on the 2 or 3 things that we want to achieve.
Sure.
Yeah,
so in terms of key matrices, how do you really track your business? On a month-on-month basis, could you share some of these matrices with us?
Sure. So it's the top of the funnel is obviously folks who come and register on our website.
Okay.
And that's where I believe the power really is, because we have a fully profiled customer.
Okay.
Even if he doesn't decide to take any service from us today,
Sure.
the intention is that you will know obviously name, telephone number, mobile number, all of which was accurate, but also where he lives, what loans he's got, what his score is, what his credit history is,
Okay.
when his loans mature, what rates he's taken it at, how he periodically performs against those loans. And that is, we believe, a rich set of data. The target is obviously to get as many to flow through the top of that model, because even if they don't take a product today, what you can do with that data, both with lenders and with the individual customer, is immense. I mean,
True.
that data is very, very rich. And even if they don't have any credit history, the fact that we were the first ones to tell them how to manage their credit, and the fact that we guide them in their credit health improvement journey, people tend to come back and they're really looking for credit. And it can open, and today it is credit, it could be anything going forward.
So how many such registrations and how many of them are paying customers?
We get today about 20,000 registrations. I would say around 10% of them pay.
Okay. So the B2B initiative will be in partnership with some of the banks.
Correct. So we're building the profiling engine, as we call it.
Okay.
And that profiling engine, we're working with a couple of banks in tandem, trying to design it, and to try and determine what is really useful for them.
So is it that banks will outsource the profiling part to your company?
They might, yes. And once the profiling engine is available, all they will do is guide the customer to us, in the hope that the customer will provide us with a little more information, and that information will hopefully help the bank make a more nuanced decision.
All right. And also in terms of the, in terms of your targets per se, especially after this funding, are you looking at, is there a number that you can share in terms of the number of registrations, number of paying registrations that you're looking at? And also in terms of the, the overall, quantum of disbursements that, you could facilitate on the platform. Is there a target for that?
There is. I'll tell you the intention. There is a company in the US called Credit Karma. We, while we're not mimicking them, we're doing a lot of what they have done.
Sure.
And they get 1 million registrations a month.
Wow. Okay.
We want to be the first ones to get there, right? To do something similar.
Sure.
Right? It may not be in year one, but pretty quickly we want to be able to do that. So the ambition is large.
Okay. Ambition is 1 million without a time frame at the moment.
I would say by year 2, end of year 2, beginning of year 3.
And just thinking aloud, and you talked about this association with banks, this profiling engine that you're speaking about. Eventually, that will give you enough information to start your own credit bureau, maybe.
Absolutely.
Is that the intention?
No, at least now the plan is not to be a credit bureau. The plan is to have as much credit information available, or information available, not necessarily credit,
right?
Because that in itself is very rich. And the profiling engine over a period of time hopefully will learn, because the more and more data you get, you are able to refine this engine.
Right.
And we will have a credit score in short order.
Okay.
Right, for this segment. Right? But the intention is not really to be a bureau.
Yeah. Final 2 questions. As a startup, there's this fight for talent which is happening across the ecosystem. How do you ensure that you retain the best talent, and how do you ensure that you keep them motivated so that they stay put?
I think it's a story, right? So as long as you have a good story, and as long as you're able to see growth, and you can provide folks meaningful jobs, exciting jobs, and if they feel like they're doing exciting jobs, I don't think retention is going to be a problem.
So are there 1, 2 or 3 things that Credit Mantri is doing essentially to position itself as an employer of choice going forward? Anything
we do a bunch of stuff. I mean, today we are under 50 employees. We are growing obviously very rapidly. What we having, we want to make it a fun place to work.
Okay.
So it's a very informal culture.
Sure.
Unlike some of the or the organizations that I worked for. So it's an open atmosphere, very little hierarchy.
Okay.
But we can afford to do that given our size. Right? Some of those will obviously fall into place, but I think the attitude and the thought process will still be, we'd like to remain nimble, like to remain open, casual.
And also, finally, are you looking at a next round of funding in the immediate future?
Yes, we believe that within the next 6 months we'll be out again. Okay. Looking for definitely another round of funding.
How much are you looking to raise?
It will really depend on what happens between now and the next 6 months. It will need to be large.
Okay.
And because if we can demonstrate the ability to scale, then the next round will need to be, many times what we raised in the first round.
We expect the current investors to also participate?
Absolutely. I mean, if we are doing well, I don't see any reason why they will not participate. They've been extremely supportive and very encouraging of our efforts and putting us on the right track.
Absolutely.
Yeah. Thanks.
Great,
Adit.
thanks.
Thank you.
Thanks
Thanks
so
very
much.
much.
Thank you.
Appreciate it.